Hello everyone, welcome to Trade Breakdown on EU. First off, we're gonna start off with the daily time frame to determine our drawn liquidity and our high time frame buys. So, on the daily time frame, you can see that first we've had this manipulation move lower below this low, and since then we've been expanding higher non-stop. If you watched my previous breakdowns, then you'd know that my long-term drawn liquidity is this high right here. That is where I'm looking for price to go to in the long term, right? Now what happened is that as we got closer to reaching the drawn liquidity, we stopped right below this high before taking it out, right? And you know that is pretty common for a price to do. That is what we call the KOD or the kiss of death phase of the sequence, right? What happened last week is that we formed this bullish daily up close candle, and then on Friday, I anticipated a retracement which actually occurred, right? Now, when this week started, my anticipation on Monday were to look for longs and look for bullish entries towards the long-term run liquidity. Sorry. But what happened on Monday is that during the London Open kill zone, we crashed lower and we formed an expansion lower, right? After that, I was seeing is that now price is down below right here, and maybe price wants to first of all treat this candle as a CRT to take out this CRT low as a short-term drawn liquidity before expanding higher towards the long-term drawn liquidity, right? That is what I anticipated for the rest of the day on Monday because of what the low London Opalkin zone had formed, right? We had an expansion lower during London Opalkin zone, and based on that price action, I anticipated that maybe New York Open or the London close kill zone wants to expand lower to take out the daily CRT low. So on Monday, I took this daily candle and this CRT low is my short-term drawn liquidity and looked for trades towards this low during the New York Open and the London close scale zone. Now remember my first drawn liquidity was to expect price to straight up expand higher towards that range higher, right, without any short-term drawn liquidity. But since price showed signs of bearishness and had an expansion lower during London Open, I adapted and changed to the new price action and took this new daily low and this CRT low as my short-term drawn liquidity before we start moving higher again. Right? This is how I determine my drawn liquidity on Monday. Now let's go down to the 4-hour time frame and it will become a lot more cleaner to you and you will understand what I mean, right? On the 4-hour time frame, you can see that we opened right here, right? Now, before we had this down close candle, my expectations were to look for longs here and to target the drawn liquidity higher. But what happened is that we had this huge down close candle during the London Opal Kill zone and we expanded lower, right? Now, after that happened, I changed my buys, my directional buys to bearish for the short term, right? Because what my thought process was is that now prices expanded lower and maybe it wants to take out the daily CRT low as the short-term drawn liquidity to form the kiss of death phase of the sequence and to form the low of the week there and then expand higher. That is what I expected, and that is why I took this low as my drawn liquidity for Monday. Then after this 4-hour candle closed, I also skipped the new candle, the new 4-hour candle as well, right? Because we had nothing significant and there were no CRTs or anything, and I couldn't take an entry right away, right? And for that reason, I stayed risk off during the majority of the day, even during New York zone, right? And what happened is that after this candle closed, this 5 a.m. candle closed, we had formed this new FEG right here, right? And along with that, I also took this candle as a CRT to position myself towards the short-term drawn liquidity lower, right? I took this as CRT because it's formed at a key time, which is the 5 a.m. and second, it led to a key level being formed and it's right at a key level, right? Which makes it a significant candle, right? And that's why I took it as a CRT. And last but not least, it was purged at a key time, and for those reasons I took this as CRT to position myself toward the short-term non-liquidity. My initial target was at least the 50% of this CRT because we were nearing the close and the end of the day, and I wanted to enter and exit as soon as possible, right? That was my thought process on the 4 hour time frame. Now let's go down to the 15-minute time frame and see what else we got there. On the 15-minute time frame, you can see that we started out with a ranging profile, but then we expanded lower, and that is what changed my mind, and that is why I started looking for shorts, right? uh, I also stayed out during all of this price action as well because we did not had any CRT or any key level or anything of those sort for me to take part or participate, right? Then after the 5 a.m. 4 hour candle closed and we formed that new CRT and key level, I started anticipating for it to be purged at a key time, and after that I wanted to see shorts at least till the 50% of the CRT, or at least 1 to 3 hour risk to reward ratio worth of targets, right? First of all, you can see that it was purged right here with these candles, right? And then price engulfed one of the candle and closed lower. So we had formed this order block entry right here, right? What I did is took an entry right here, but price went higher to stop me out within the next few candles, right? And as this happened and I had a loss, I still had conviction in this trade idea and all of that narrative that I'd built. So that's why I waited for another entry to be formed as well to take another shot, right? Because I had enough conviction in this trade idea that it would play out. And that new entry formed here after we purged above the CRT and this high again with this candle, and then we engulfed that particular candle by closing lower, right? It was purged again at a key time, so I had conviction in the trade in that trade. So right after the order block entry was formed and I had seen a confirmation, I took an entry in the order block low, stop loss above the order block, and I targeted at least either the 50% of the CRT or a 1 to 3 risk to reward ratio worth of target, right? I usually like I most of the time target at least 1 to 3 risk to reward ratio, right? And then close my entry there as soon as 3R is reached, right? I close the trade before the daily close to avoid holding it overnight, right? And that way I always make sure that I exit and enter within that particular day and avoid holding it overnight, right? Even with this trade, I targeted 1 to 3R, and as soon as it was reached, I closed it, and that way I ended the day with plus 2R with one win and one loss, right? Now you can see here is the edge or the power of risk to reward ratio, right? Like even though I had one loss and one win, I still was up 2R, right? And even if I had lost the next two trades, I'd still be break even and not even on the losing card, right? That's why I never take trades that offers me less than 1 to 3 risk to reward ratio, right? It must have at least 3R for me before I could take it or think of taking it, right? Because I know that how important a risk to reward ratio is and how big of an edge it gives us in our analysis and our trade ideas in execution.